Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. The Australian dollar trimmed some losses after the overnight session fell to the key bearish trigger level, which I'm calling at the moment at 68.35. Now a break beneath this level, along with the fact that we do have the 60-day moving average just close to it by 28, would affirm or confirm the fact that this bearish outside range day and also this doji should enforce further bearish traction into the session and therefore look towards a target of 67.55 to 65. The Australian dollar fell after Tuesday's release of the dovish minutes from the RBA. It is assessed from the minutes that the RBA has opened the door to another interest rate cut as early as February. This should also increase further bearishness to possibly look to the target on the broader picture of 66, 60, 80, which was challenged back here in late December. Any advances should find resistance at 68.95. Still to come is tomorrow's job numbers. Now, previously was negative 19,000. And the market at this stage is forecasting 15,200 jobs. So let's see what that number holds, as we could see another spike to the downside and maybe trigger this level of 68.35. Overnight, the Euro bulls thought better of taking it to the upside challenge that saw a rejection at 112 figure 15 after the market posted a brief high of 111.74. From the technical picture, I do believe further risk is coming to the downside and therefore could see a break of 110.90 to reinstate the target of 109.50.70. The dollar yen case is still a little bit hesitant towards the top side, with the resistance still seen at 109.70. It is viewed that another rejection like previously will emerge and therefore look back towards 108.75, with the target still holding at 108.20. The pound was weaker overnight and now giving some concern that we could see a fall to 129 after the break of 132. It was stated that the bearish sentiment emerged after the Downing Street announced plans to write into law that the UK will leave the EU in 2020 without allowing an extension of the transition period. So let's see what happens there. This in terms could see a hard Brexit landing or a divorce that could see very much uncertainty in where we could go. So from the bullishness and the rejection, and also in the last 3 days we've fallen close to 450 points around there. So let's see if the market has enough momentum to take it higher in terms of the euro sterling cross, as that's showing some momentum, but this bearishness for the pound should continue. There is still uncertainty where the gold may go in terms of the upside. A break of 82 could see 1,500 or even as high as 1,515. Any pullback should be limited, as I believe we are now forging a base around this level of 50 to 58. Finishing up with oil, well, we've reached or close to my target of $61 a barrel. I feel it's time to reassess now due to the fact that we could see a rejection from this level, purely for the fact that the triangle is somewhat negative, but the trend is still strong and we're still holding relatively firm. So we could even see this rise beyond 61, maybe to an extension of 63.5. Well, that wraps up for today. Thank you very much for joining me, and as always, look out for the intraday report. I hope you enjoy the great start to this new day.